All right, good morning, everybody. We are live here. Uh, Today is going to be a learning day. We traded earlier, but we did not. We're right now. We want to try to teach everybody a couple of things. What I'm telling everybody right now is, I told the guys in the room, I said, do not enter the trade unless it closes below the 23 and a quarter on my 8100 chart. My 8100 chart is my first chart on the left-hand side. I will draw a horizontal line so that you can see it. If it closes below that area there on this bar, I'm telling you now, the market's probably going to drop another 40, 50 points potentially. If not, it'll make a higher low, right? But it has to close below this area here. And she's having a hard time. And you notice she did not close below that, which gives me definitive recalls. So I'm teaching everybody. This is going to be me. I don't talk. I've been talking a lot, but I'm going to talk a good bit today because I'm going to teach you how to see the markets and be able to trade fluidly through the markets. All right. Got my guys on. We may call a live trade or two, but the guys are trading different time frames today. So that's why this is a good learning opportunity for everybody out there in YouTube land. I want to be very, very pointedly clear. This is not advice. This is not me telling you what to do. This is me giving you dissection and education on the market based on my years of experience in trading. Okay. It's really, really simple, but it's not. And it's really, really easy once you have an understanding. The part is you have to get the understanding of how the market moves. It does not matter about indicators. It doesn't matter about support and resistance. It does not matter about key levels. It does not matter about price. It does not matter about volume. It matters, do you understand how they work synergistically together so that you can extract profits from the market on a consistent basis? Okay, that's what matters. Nothing else matters. You have to be able to, again, synergistically understand the flow of price from one chart to another so that you can then profit. Okay. And what we're doing is, I told him if it doesn't close below, it was going up. So as you can see, it didn't close below my support line. It just went down there and tested it. Now she's going up. Right. So now we'd be looking for an opportunity to go long here, and I might call a long trade here. Matter of fact, I will call a long trade for those out in YouTube land, but the markets have to look a certain way for me to do that. Right now, I don't have that opportunity, so I'm not talking about it. And I'll explain to you. I'll explain to you verbatim. Can you hear me? Is everybody checking 1, 2, 3?
Yeah, I can hear you.
All right, good. So I just want to make sure everybody can hear me. That trade is not triggered yet for me because I'm using a smaller time frame, which is the 900, which is the third chart from the right that has 0 indicators on it. And all this is forming is a potential ABC pattern on your larger time frame, which is the 8100. Right? That's all it's doing. It's potentially forming an ABC pattern because it's in a definitive downtrend on your larger time frames. Okay. So we're looking for the market to give us a certain look. And then when it gives us this look, then I will call the trade out live. I'm not saying to take the trade. I'm not saying to take the trade. I'm just saying I'll call the trade out live from where it should go. This thing is just moving up on us now. We have to have a pause, what I call a pause in the market. And it hasn't paused really yet on the time frames we wanted to pause on. It's straight up right now. But please log in, and log your questions if you have any. And then let's see what happens. Again, right now we're looking for, this is the potential ABC pattern to come back down though. It made that move to the upside pretty quickly, which gives me reason for pause. But we will see what it gives us. And I'll do the commentating throughout this session. We won't be on a real long time today, but we'll be on long enough for you to kind of get a gist of what we're doing and why we're doing what we're doing. Only pay attention to price. Don't worry about the indicators. I'll explain them when they become relevant, because they're not relevant until price lines up a certain way, right?
That green bar gave us a pullback on the 900.
Right.
Green bar.
Hold on one second, Ron. So right now, ladies and gentlemen, if price breaks the high of that green bar on the 900, then you have a trade with a 51 stop and about a 60 entry and about a 66, 65 target. I don't know if you want to do that, because this is potential. It's only potential. So it's not even a trade. So it didn't trigger, so it doesn't matter, right? So you had about a 1-to-1 ratio on that trade. Because you had a 1-to-1 ratio, because it's technically counter trend to the overall market right now, and it's potentially an ABC pattern on that 8100. That is what you have to be able to understand. You can't trade in a vacuum. One chart, in my opinion, is not enough, unless you're trading really large time frames that have really big moves, right? So if you have trading bigger time frames and they have bigger moves, you can be wrong and still be able to profit on the trade, because you might have a trade that might have a 30-point stop. Just using this for an example, and it goes 26 points in your favor. Well, if it goes 26 points in your favor, you shouldn't lose on that trade, right? You might want to hold it for more, but you shouldn't lose on it, right? So in this particular instance right here, again, once this bar finishes, we have to see if it finishes green or red. If it finishes bullish, so this bar finished bullish, okay, on the 900. If it broke the low, so it doesn't matter. Again, it broke the low, so it doesn't matter. So we're still looking. We have potential divergence on our 2700. This is when I'll talk about the indicators. If you look on the 2700, you will notice that price, and I'll draw it for you so that you can see. That is not what I meant to do. Hold on. Oh, my bad. Hold on. I apologize, ladies and gentlemen. Let me move this out of the way. All right. So right now, if it breaks the high of that green bar, it is going to go up. So now you had an entry of 49.25 with a stop of 40. So you'd expect it to get to about 60. Let's see if it does that. But you have to be very careful about this trade, because, again, it's potential divergence to come back down. So if you were to take that trade, you'd have to keep that in mind. This is not something that I would be willing to bet a bunch of money on, but it is a legit entry. And as you can see, it is going up, right? It had an entry at 49.25, and we'll see how far it goes up here. And watch it. I was talking about that divergence, so let me finish talking about it. And see, this is what I'm talking about here. All right, so she's continuing to push up a little bit here as she pauses. Let's see if she pushes up. Okay, she's pushing up a little bit more. Good, good. Right, so this trade is working, but you should keep in mind that this could be an ABC pattern, so you shouldn't give it that much rope. But if you're in it, I would be getting out right now. I would not let it go to a negative, right? Because you know for a fact that it's potential ABC pattern. So I would have broke even or made a little bit on that trade. And everything lined up for us to go potentially up, but these are smaller time frames. When I'm looking at the 900, smaller time frames when I'm looking at the 900. It hasn't hit your absolute stop. And that absolute stop would have been down here. But again, me personally, I would have been out. Your stop would have been 40 and a quarter. And your entry, I told you, is 49 and a quarter, and it's not hit your stop yet. I just wouldn't take a loss on this trade. Me personally, I wouldn't take a loss on this trade because I'll give you a nugget. Trading is more and more about money management than it is about trading. You have to be able to understand how to manage the money and manage the situation, manage the risk, right? This is not an ideal trade. If I had to grade the trade on a scale A through F, I give this trade like a C, right? Because you do have everything going in your favor short term, but long term, if this thing turns over like it's trying to do now, right, it becomes an ABC pattern on your larger time frame, and the only way you know that is by looking at your larger time frame, right? Whatever time frame you're trading on, you need to go up in time frame to see what the context of that market is, and this thing still hasn't stopped you out technically. But I would be managing the money versus managing the trade, because this is a trade that may work. It may work nice, right? Because it never hit the ultimate stop. But again, you don't know if this thing's going to turn over or if it's going to go up. And you never know about the trade. But in this particular case, we trade in probabilities. And I teach the guys to trade in probabilities, right? That's all we're doing. We're not doing anything else. We're literally trading in probabilities. And if you didn't take your profit and, take the break even, it stopped you out of that trade. But you have to understand the why behind it stopped you out of that trade. Why? Because you have an ABC pattern potentially forming right here to go down. And that's where more institutional money might be sitting because it's a larger time frame. These are nuggets today that I'm teaching because we trade price. We don't trade indicators. And when I say that, this is what I mean. The indicators are there to confirm what we see in price. What do you mean by that, Will? Well, let me show you something. Right here, I told you there was divergence. I didn't get a chance to draw because that trade triggered, and I want you to see what it did, right? And I told you if it didn't work immediately, I would be getting out of the trade. Okay, so you got divergence here. But there's also triple divergence. And this is something that I teach my guys, because you have divergence there too, right? So you have 3 points, 3 divergences. So the chance of this thing coming down becomes extremely big, right? We do have a support area sitting right here at this 23 area. As I told the gentleman, unless she breaks through that, she's not going down. And if you're playing down here, which is nothing wrong with that, right? There's nothing wrong with playing and trying to get your trade in down here, but you have to be very careful that you've not hit a resistance area. I mean, a support area, right? Because if you look straight across where my line is printed, which is, hold on one second. All right, went back up to 60. If you look where my line is printed, if it doesn't get below that line, I told him I thought it would go up. And you can see, you look straight across here. That was an area at one time, and it's just becoming an area, a small area again. That's all that is. And let's see what we have here. All right, so for me, I'd be waiting. I'd be waiting to enter on my 900 again. I would have, again, that first trade for me would have been a break even trade. This an ABC pattern, honestly. If you look at the overall move here, and then it gave you the ABC pattern, which I wasn't looking at the time, but it did give you ABC pattern, which is a very, very strong pattern to enter on. So we just have to wait and see. Have to wait and see. So that first trade would have been a break even, make a point or two. You do have confirmation that this thing should go up. There's no guarantees. And we're waiting on the market structure.
Okay, did it? I had missed that. Did it give us a chance to enter on the upside or no?
No. It did not give us a chance to enter on the upside on the charts that we're on the chart that we're looking at. On the chart that we're looking at.
Okay.
Now, it gave you an ABC pattern, but I wasn't looking for an ABC pattern on the 900. You know, I looked for the ABC pattern on the 300 volume, but it gave an ABC pattern on the 900 here. This was just a strong pattern. This is why it's going up like it's going up here.
Okay.
But I'm looking for I'm looking for this thing to move a certain way. And ladies and gentlemen, you'll see what I'm talking about here just shortly. That's not a trade for me yet. And I wouldn't be calling this unless things happen a certain way. And that certain way is if I'm going to enter on the ABC pattern, 99% of the time it's going to be on the 300. The ABC patterns on the 900 work well and better than they do on the 300. The stops are just bigger, right? And when I'm trying to trade size, I don't want the stop to be as big as it is on the 300, right? I mean, on the 300 is minimal stops, or you're able to add size. And when you're going with the overall trend of the market, if it works, it becomes a gargantuan trade. Keith, did you enter that trade on what you're doing at all?
Yeah, I entered it. But full disclosure, I made money on it. I got 5.5 points off of it. But I exited because I entered on the I got the it was green. I was waiting for it was green, and then as I hit the button, it closed red and I entered it early. So I got out when it pushed up, and then when it came back down for a second, I got out because I didn't feel it was the correct trade. I should have been entering on that green bar, and that's when it took off. So when I entered, I had to deal with some stuff.
So let me ask a question, right? Ladies and gentlemen, this is more advanced for my advanced guys here. So let's just go through it. We'll go through a little bit of it here. Keith, you see what I see here?
Yeah, I ended on that red on that bar right on that red bar. That's just a stick.
Right. The doji.
It was green and it closed red. So I entered it right then I entered it then. So when it went up on that green bar right there, it's all green now, but that bar it went up about 10 points. See where that stick at? Where the top was at? When it got up there, I was gonna let it run, and then it dropped down a little bit, and I got out because it was an arrow trade. Because in my mind, it was an arrow trade. Now I was gonna ask you about it later, but
that's fine.
I didn't want to have questions and watch me lose points. But it's working, so of course I should have stayed in it. But
yeah, and see, hold on a second, ladies and gentlemen, this would be a trade for me right here. At 79.50, stop at 72. So when it got up to about 86, I'd be exiting the trade. I'd give this one not too much rope. but I'd give it some because the move has already happened. But this move should work to the upside. I'm not saying it will, but it should work to the upside here.
Yeah, see.
And if it doesn't, it's because you entered the trade late. You'd be entering the trade at a late time. So that's
why am I getting slipped so bad?
So let's see what this thing does here.
I don't understand.
Yeah, that one right there. Honestly, that one right there would not have worked. It's good that you got 5.5 points, Keith. So you have to reset because for me, ladies and gentlemen, full disclosure, that trade right there would not have worked. I'm not trading live. I'm just teaching and learning today. I'm teaching and learning. Forgive me, I had to pause because I got a text here. 1 second, ladies and gentlemen. That trade right there for me would not have worked. I would not have. This is a legit entry, and let me show you what I mean by legit entry for me. Because whenever a bar closes bullish, ends up a bearish bar, ends up closing bullish, I like to take that trade because most of the time it's going to go in your favor. The only thing about that is I knew for a fact that because it gave you that ABC pattern that moved literally from 40 to 84 with a minimal stop, it would have had to break through that high and keep going, right? I told you guys, it would have had to get to about 86. It got to 84.50, but in real life, I would not have lost on this trade either. I would have scratched it, right? And I have a lot of scratch trades because if trades don't work the way I want them to immediately, I get out of the trade. The old adage, cut your losers short and let your winners ride, is what we try to do and what we try to teach. You don't just sit up here and just take a brow beating if the market's not working for you. You have to be able to allow yourself an opportunity to make money. Like for me now, this is tough, but I think it's going to come down to a degree. And I don't know that for sure, but I think she may be trying to come down now because she's pausing a lot as she's trying to go up, and a whole lot. So anyway, that being said, I'm taking all questions on this platform this morning. But in order for me to take questions, let me make sure I'm not getting feedback from everybody, from anybody. So let's see what this thing does right here. Keith, that was a good trade. That was a good trade. So I mean, and I understand when you get in and it doesn't do what you want it to do, the best thing to do is just get out if it was an error trade. But that thing turned out to be, if I'm not mistaken.
Yeah, it got me out about this. Where using the system, it got me out by where I would have got out. Where I got out at.
Let me see here, because the entry on mine would have been 66 and the out would have been, yeah, exactly right. It would have got you out as, I mean, you'd have made money on that particular exit. That's pretty good. So 66 and it went as high as 86.
Yeah.
So
dude, my entry was 58.75. And
your entry was 58.75?
Yeah, and I got out at 64.25. Like I said, I got out before the trade took off because I thought it was an error trade. If I would have stayed in it, if I would have got, so I got out of it with profit. I was gonna I gave it a chance to work, but it kind of went back and forth a little bit. And knowing that I got into it was an error trade, I didn't want to get greedy with it. So I just took I took what I was supposed to get because, but it is what it is. I managed the money in my opinion.
So yeah, ladies and gentlemen, that's I mean, for me, oh yeah. So here it is, ladies and gentlemen. Here it is. I'm starting to get bearish sentiment on my larger time frame. And because I'm getting bearish sentiment, it depends on how this particular bar closes. But if it closes bearish at all, I can assure you that we're going to have some downside movement. So you just have to wait for that opportunity. That's all. Just have to wait for the opportunity. That is all. There are some tricks that I am going to show. As a matter of fact, I'll go ahead and show one of them now. Gents, this is for you more so than anything or anybody else. When you have on your largest time, oh, that thing, it finished bullish. That's interesting, right? So tough situation right here. You shouldn't be trading, right? In this area, you should not be trading. There's nothing to do. So I'll teach this sentiment. When you on your short-term momentum, if price is confirming what the indicator's showing you, and the indicator's showing you the same thing that price, if they're confirming each other, right? And you get a poke bar, that's something we teach in class, ladies and gentlemen, in our class and in our private group. But if you get what we call a poke bar, and you have an ABC pattern as well, right? You can take that trade on a 900 just about every time. However, I will say to you this, just listen to what I'm saying to you. You're going to have a decent stop, meaning that if you're going to take this ABC pattern, your stop is here. So 16 would have been your stop. 40 would have been your entry. Now you can use the immediate stop, which would have been 26. So that negates a good portion of that. But you have to realize that if it doesn't break this low here, she's going to continue to go up, right? And that's what I see, right? That's what I see right now. It's the same thing right here. This right here gave you this poke bar here. And this is a great example of what I'm talking about, right? Your stop is going to have to be here, which is the 84. It would have given you an entry here at 67. If you take this immediate stop, it stops you out of the trade, right? Stops you out of the trade because this is an ABC pattern to come back down. I was telling the gentleman that earlier. Because the momentum is down. These are just re-entry points if it doesn't break this high. And that's why you can't trade so big that you can't take the actual stop. In my opinion, you should trade small and assume you're going to be wrong on every trade and build your trade versus assuming you're going to be right, because that's rather arrogant. Ain't no way to put it. It's rather arrogant to think, hey, I'm going to be right. Assume you're going to be wrong, and when the market proves you right, then you add to your trade so that you can then become gargantuanly profitable. Your trading book should look like this. Your trading journal should look like this. Negative 100, negative 160, plus 200, negative 75, negative 150, positive 150, positive 80, negative 75, positive 200, positive 2,250. That's about a 50-50 ratio. But on the one you hit the mother load, you hit the mother load, right? And you also have to be disciplined and wait on everything that you want to see in order to take the trade. That's the biggest thing. You can't be just in here haphazardly trading, thinking, okay, cool is going up, cool is going down. And you're just trading back and forth, back and forth, back and forth, back and forth, not realizing what you're doing. You have to have a very, very, very good understanding of what the market is doing and why. In my opinion, I think this is just a pullback from a different time frame. So let's just see. We're going to go to the 24,300 chart. Somebody asked me, well, why do you use the time frame that you use? That's something that we
Oh, I thought you wanted me to ask you. My bad. You go.
that is something that we teach again in the private group, but here's the overall arching answer. You have to take the average volume over a month and divide by the time frame differential that you're using. And then that'll give you the chart that you want to use to trade. And you get down as low as you want as far as what your risk tolerance is based on your account size. And you go as high as you want based on your risk tolerance and your account size. Simple as that. So if you have a 3 time frame differential, you divide that volume from the previous month by that amount of time frame. So you 3 divide, I don't know, I'm just using this for an example, 11 million volume for that month, divide that by 3 all the way down till you get to where you want to be. So that's what I would do. And that's how I get where I get my volume charts from. Now, this right here is exactly what I'm talking about. Now, this is a very long-term trade, very long-term trade. However, if in 5,000 contracts, this thing finishes low right here, you're going to have a trade to the downside. Now I want to teach you a nugget, right? Everything in the markets are fractals. Everything. If you don't know what fractal means, I want you to look that up and then come back and tell me what it means. But everything in the market is fractal. So this is 24,300. I'm going to change this to an 8,100 for a second, just to give you an example of exactly what I'm talking about. We don't know what this bar is going to finish, but I can guarantee you this, and we'll wait for a little while just to see if this happens. It's giving you an ABC pattern here. It's giving you an ABC pattern here, potentially, right? It's giving you an ABC pattern here, potentially. And if it gives you a nice pullback and what we call a market structure pullback, again, if you don't know what a market structure is, go look that up and get back with me and let me know what it is, and we'll talk about it. But these are just things for you to go and do some research on so that you can see. Fractal, the two I'm giving you right now are fractal and market structures, right? So this right here gives you a nice market structure pullback. This right here gives you an ABC pattern. Let me move this out of the way. This right here is an ABC pattern to go down. So they're going to look. That's what happens. You want the look that you want to see, and this right here is a nice look. It's a nice look. So that being said, We just wait. But I'm gonna tell you right now, if in 3,000 contracts this bar finishes bearish and closes, and then not even close, if it gets below the low of this bar, it's gonna fall apart. It's going to fall apart. Now, could I be wrong? Absolutely. But I have a high probability of being right. And I'm not going to assume I'm going to be right. What I'm going to do is I'll trickle into the trade. What that means is I'll put in one test market, then I'll put in another one, and then another one, and another one. If I'm right, then I'll feel good about myself. If I'm wrong, I'm like, okay, go well, I'll lose whatever I lose. So that's how you're supposed to do that. If it finishes bullish or neutral, there's nothing to do. Right? Nothing to do. But looking at those larger time frames will allow you grace. And it'll allow you an opportunity to prove yourself right or prove yourself wrong. Point blank, period. So now I'm going to ask, are there any questions that anybody has?
No, not at the moment.
Stop to
Right, hold on 1 second. All right, so that bar finished and it finished bullish, so it's nothing to do, right? So now but we do realize that this thing can turn back over, right? And we do realize that it could turn back over, right? Because if you look at this here, this is crazy, but I talked about this ABC pattern yesterday to the guys, and this ABC pattern proved very, very, very fruitful. It's the word I'm gonna use. It proved very, very fruitful.
I'll be right back. I gotta step away for a second.
All right, no problem. But no, so there's nothing to do here, nothing to see here. So we go back to our regular time frames, and as you can see, this right here is going up. Because she's going up, what I'm going to do is now look for a pullback on the 900, and I'll call this one for sure, because this one should be the one that works. It should be the one that works to a degree, realizing that we can't hold it too long, because now she has to break the high. She breaks the high before giving me the trade. When I say high, so let me show you what high I'm talking about. If she just broke it. She broke this high I was talking about. She breaks above 86. That's tough, because now you have to watch it and see where she's going to go. Again, today is meant as a pure learning and teaching day.
See the 20-year-old lifetime. We don't have a lot of credibility.
So This bar right here, if it closes green, this would be a trade to the upside. But yeah, I'm gonna tell you right now, if it breaks this high, it's gonna go up about, that's 88, and then this low here is 82. She'll give you the 6 points if she breaks this high. So I can tell you now, if she gets to 90, she'll go to 96. If she gets to If she breaks 80, gets to 89, she'll go to 96. And now watch what I tell you. So now that would be your entry at 89. Now watch it. So 95, 96 will be my target. If it gets to 95, that means I'm not losing on trade. Like I told you, see, now you see she's at 96. I'd be exiting the trade to win her. You have to know when that works. So, and now she's continuing to go. That's not one I will be looking to add on to, because again, the overall market is down. That's why I talk about exiting these trades going long. Even though it's going long in spurts. The one you want to add on to is when everything's lined up in your favor and the overall market is in the direction. So there we have it. And this thing is at 99.
See the 20-year-old life.
It's at 99. It's at 04. So the 88 entries at 04. Full disclosure, I would have been out at 86, but you can see how this trade is going to work. Right? That trade has a high probability of working. Why? Because you're looking at your larger time frames, and your larger time frame dictated to you that trade. That is why that trade worked. 100%. 100%. So there you have it, ladies and gentlemen. There you have it. I've called 3 trades, 1 loser, 1 winner, 1 break even. So, I would have made a little bit on that trade, honestly, but I'll call it a break even. I would have lost money on the trade. And that's how you manage. That's how you manage your trading. And that's what we do in our trading, right? And this trade right here is, you can see it's just taking off. It's just taking off here. Any questions? Ronald Jones, any questions?
No, sir.
All right. All right. Is this making sense to you, Ron?
So I do, because I did, I've been simming over here today.
Right.
So on this one, because I got out at about 86. What is it? Because I guess the reason to get out is because it already made a bit of a move, or
No, I'll just, and when in the cases of when I'm counter trend to the overall market,
okay.
I'm really only looking for a 1-to-1. So you made about 8 points on that trade?
Hold on, let me see what I made. Hold up. 1 second. I made 94. So no, I only made 5 points. I got in at 89.25, and I got out at 94.25. I thought I got out at 95.
Oh, that's okay. That's okay. I mean, you're still in the learning stage and trying to do this on your own. So like I said, you're way ahead of the curve. If you continue to see those trades like I'm calling them, right? The reason why this was a trade, ladies and gentlemen, is simply this, right? So I'm gonna explain this to you. Nugget drop. Ladies and gentlemen, pay attention to this because I'm going to show you why a trade works. On our largest time frame, we have a higher low, a market structure higher low, which is signified by, and let me do my tools, by this here. This is a what we call a market structure higher low, right? It's a pullback, market structure higher low. Once it gives us that market structure higher low, we then look for what we call a trend within a trend trade and look for a pullback. It pulled back. And at this point, I want to show you so you can see it. At this point, we get a pullback. We get some people come in. I don't know if they're taking profits or they're trying to go short. It doesn't even matter, right? So now market pulls back and it gives me a bearish bar with a bullish close. Hint, it gives me a bearish bar, a bullish close. If price then gets above this particular high, it has a high probability of continuing to the upside. And when I say high, I mean it is better than a 50-50 shot. That is one of the edges that we use in our trading. Nugget drop. On to the next. So now what we're doing is waiting for an opportunity to now go long after another market structure or look for short if in fact we get bearish sentiment and she starts to push down. But again, we don't know the answer to such, so we just wait and see what's really going on here. The market was down 200 points or about. So this right here is giving you a market structure pullback here on this 24,000, right? This is the third move to the downside, which gives me reason for pause because you have one move. So you have a lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now, she came down here and stopped at this support area, tested it, and then continued up. That kind of stuff is important to know. So now we need to wait and see what's going to happen. And that's really the largest time frame I'm going to look at intraday. Okay, that's really the largest time frame I'm going to look at intraday. So please, I implore you to study this session because I have given you enough information that you can then be very, very profitable. And I'm going to summarize here and we'll go ahead and get off. And we're going to send this out to as many people who want to watch. But it is a very, 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 very good day to learn. So I'm going to show you something again. And let me go back to my 8100, right? That's the 24,300 that I'm looking at. And let's go over some things. Let's go over some things, right? I showed you the trade that we took. Let's go over some other ones that happened earlier in the day before we actually got on. Okay. This right here is a market structure pullback. Right, and I'm going to highlight it for you right here. This is what we call a market structure pullback right there, right? Pullback, started going down, right? So now, at this point, we're looking for the same opportunities that we always look for. So now we know for a fact that it's pulling back. Guess what? We have a bullish bar with a bearish close. When price gets below this bar, it is going to go down. Going to go down. I haven't said anything about indicators because that's not important. What's important is for you to recognize the price action. You have a market structure pullback, and then you have a downside move. Once you have that downside move, you look for a bar that gives you, from a short perspective, a bullish bar with a bearish close. And you take that trade every time. You can take that trade every time, and it's going to work most of the time. I'll show you again. This is a 1 bar pullback. This is still a 1 bar pullback right there. And then it starts going down. Then you have a bearish engulfing bar, but you have a bullish bar with a bearish close. If it breaks this low, it's going to go down. I'm sitting here telling you unequivocally that's going to happen. I'll give you another example. Let's go to a different day. Ronald Jones, I don't know what day you're going to choose, but you choose any day this year that you want me to go to, any day. And we'll give one more example, and then we'll get ready and get off YouTube.
Okay. What day would that? Go back to the 11th, because I think I had a tough day on the 11th.
All right, so I'm gonna go to the 11th. I'm just gonna pick a random. I'm gonna pick a random trade on the 11th. Right. I'm gonna show you how it works again.
And that bar on that 8100, it finished red.
It did. Come on, restart.
Yeah, it finished.
Okay. Well, we'll get to it. Give me 1 second here. Let me go over this right here. Give the people something to. So now, again, we have that's a ABC pattern. So let's go to something that's a market structure. So we have a market structure right here, ladies and gentlemen. And I've been teaching this exact same stuff for years. So this is not something that's brand new. I've been doing this exact same kind of trading for over 25 years. And you can go back and look at some of my old YouTube videos from a different channel, and you'll see what I'm talking about. This right here is another prime example. You have a bullish bar with a bearish doji close. If it breaks this low, it's going down. Well, Will, I don't know that. I mean, that's everything's red right there. Okay, cool. So you have a bullish bar with a bearish close here. Same thing. Bullish bar with bearish close here. Same thing. It's going to do it over and over and over and over again. I'll give anybody that if you want to learn how to be consistently profitable quickly, learn what I'm showing you right here. Learn what I'm showing you right here. Market structure on your larger time frame. Then the larger time frame resumes the trend. Then all you're doing is looking for a market structure, preferably. But if you get a bullish bar with a bearish close for a short, or a bearish bar with a bullish bar for a long, and let's see if we can find that on the 11. So this is a higher low, right? This is a higher low. This is not going to resume the trend, but it is a higher low. So let's see. Did the same thing here. Bearish bar with a bullish close becomes a bullish engulfing bar, takes off to the upside. You're not going to, the psychology of the market cannot ever change. When you walk, you put one foot in front of the other. When you run, you just do it at a rapid pace. When you skip, you're just doing it at a jovial pace. But it's still,
you would have been able to add you would have been able to add a few contracts on that one, huh?
Well, potentially, yeah. Potentially. But ladies and gentlemen, that's all it is, right? That's all I'm showing you here. And what we'll do is we'll go ahead and call it, because I want this to be a teaching session. I don't know how long we've been on, but I think we've been on long enough for you to have seen a very viable way of trading. And if you have any questions, hit me at support@theprofitstalker.com. Join the channel, share the channel, Ask questions. We're here. We trade live every day. So with that said, you guys have a great rest of your day. We're going to get to it. All right.